Welcome back to Alpha Recap. I'm so glad you could join us. We're wrapping up the trading day and unpacking what moved markets. As always, if you have questions, you can reach us at stockalpha.ai. Today's tape had a clear risk-off tilt, so let's get into it.
Great to be here. Lots to cover. Earnings, geopolitics, and some tech volatility all mixed together.
All right, James, quick headline for listeners before we dive in. How did the major benchmarks finish?
Markets closed lower across the board. The broad index ETF finished down about 0.7%. The tech-heavy ETF was down about 0.3%, and small caps, the small cap ETF, fell about 1.4%. That small cap drop really set the tone.
Okay, so small caps led the sell-off. That felt like a classic post-earnings pullback mixed with macro uncertainty.
Exactly. When you step back and look at this, earnings headlines were still settling. And then you add geopolitics in the Middle East and ongoing debate about rate paths. It made for a cautious day.
Let's talk sector action. Which areas outperformed and which lagged?
Defensive and income-oriented sectors outperformed. Utilities and parts of materials and mining held up pretty well. Real estate, the REIT complex, was mixed but generally fared better than cyclicals. On the downside, we saw pressure in communication services and consumer discretionary, and parts of tech that felt more cyclical or speculative underperformed.
Utilities and materials sticking up. Interesting combo. What was driving the strength in materials and mining?
Momentum there suggested that commodity-linked demand narratives are still alive, either supply concerns or pockets of optimism on global industrial activity. Traders often view those names as a hedge when broad equities wobble.
And utilities, steady cash flows and dividends tend to attract short-term safe haven flows, right?
Right, and the search for yield on days like this pushes money toward more stable cash flow stories.
Let's zoom in on technology, since it often sets the tone for risk appetite. Big moves there?
Tech was pretty bifurcated. The overall tech-heavy ETF was only modestly down, helped by some mega-cap defensive features. But hardware and infrastructure names showed idiosyncratic volatility. Broadcom reported a revenue miss, and that drew attention to near-term demand for networking and infrastructure. Not great.
Oof, Broadcom's miss was a headline grabber. How did investors differentiate after that?
Investors were separating out AI compute beneficiaries from the rest. Marvell continued to attract interest because of its networking and AI infrastructure exposure. The market rewarded names with a credible AI story while punishing those with weaker near-term demand commentary.
Makes sense. A couple of short reactions. Right.
Yeah, that tracks.
Okay, moving to individual stocks. Which corporate reports stood out today?
Broadcom's revenue miss was the main tech headline. Palo Alto Networks slid after analysts cited tougher competition, margin concerns, and cautious enterprise spending commentary. On the positive side, Macy's reported its strongest first quarter growth in about 4 years, which was a notable bright spot for retail.
And there were some interesting mid-cap reads too, right? Hub Group and Paychex?
Yes, those names were being dissected for micro signs of economic activity. Freight trends at Hub Group and payroll dynamics at Paychex give useful color on small and medium enterprise activity and hiring.
We also saw chatter around that big chip maker in Taiwan. How was that framed?
Taiwan Semiconductor stayed in focus because analysts view foundry capacity and hardware supply chains as central to multi-year AI deployments. So even if some hardware categories were soft near-term, the company sits at the center of longer-term compute demand.
Quick reality check on crypto and energy. Both got mentioned in the notes. What happened there?
Crypto faced headwinds from tighter sentiment and regulatory chatter, which fed into correlated risk-off flows. Energy was mixed. There were fresh Iran-related strike headlines that raised supply risks, but any immediate oil move was muted as traders weighed the headline risk against inventories and broader demand concerns.
So, headline-driven spikes, followed by reassessment. Classic two-stage pricing in oil markets.
Exactly.
Let's turn to the macro angle. Inflation, the labor market, and the Fed. How were those threads affecting the tape?
Analysts noted that with inflation still on the watch list and labor markets staying relatively tight, markets remained sensitive to the path of interest rates. There wasn't a single blockbuster macro print today, but the stream of upcoming data, consumer price measures, payrolls, regional surveys, will be the inputs that set rate expectations. The working assumption in a lot of models was that officials were staying data dependent rather than telegraphing cuts.
So if payrolls surprise to the upside or services inflation sticks, that would push a cautious stance?
Yes, stronger than expected payrolls or sticky services inflation would likely reinforce a cautious stance toward equities, particularly small caps and cyclicals that are more rate sensitive.
Let's cover breadth and technicals briefly. What did the internals tell us?
Breadth leaned negative, with small caps underperforming large caps, which signaled a defensive posture. Quant desks and technicians will be watching short and medium-term moving averages and recent support zones for the big indices. A break below key levels could mean a more extended pullback, while confirmation of support could keep things range-bound.
For listeners who like simple framing, what did this session feel like in plain English?
It felt like a day where selective stock-specific rallies gave way to broader caution once earnings headlines, geopolitics, and macro uncertainty overlapped. Size and liquidity mattered. Large defensive names held better, while smaller, more cyclical names were sold.
Honestly, I was a bit surprised by how sharply small caps lagged relative to the major indexes.
Yeah, that was the main narrative. Small cap weakness in risk-off episodes is a recurring pattern, and today fit that script.
Before we wrap, quick checklist. What are the most important things to watch for the next session?
Number 1, the economic calendar and any Fed speakers. Inflation prints and payrolls will be immediate catalysts. Number 2, earnings follow-through. Mid-cap guidance in the days ahead could confirm whether today's risk-off was transient. Number 3, geopolitical developments. Any escalation or de-escalation in the Middle East would influence energy and safe haven flows. And number 4, technical pivot points for the big indices and whether small caps can stabilize.
Great, concise and actionable. Let's finish with 3 clear takeaways for listeners.
First, markets closed lower with a clear small cap-led pullback. That points to a defensive stance among traders. Second, tech was mixed. Idiosyncratic earnings and AI-related positioning drove the winners and losers. Third, the Fed overhang and upcoming data will likely keep volatility elevated until there's a clearer signal on inflation and growth.
Perfect. Quick reminder, this is informational. We're sharing market observations and analysis, not personalized investment advice or recommendations.
Exactly. Analysts note trends and data suggests certain market dynamics, but everyone should consider their own research and risk profile.
All right, that does it for today. If you have questions about anything we covered, head to stockalpha.ai, where you can ask us directly, and we'll answer live. For more market analysis and insights, visit stockalpha.ai. And don't forget to send us your questions at stockalpha.ai. Thanks for listening.
Thanks. Talk to you next time.